Okay, hello, Uranium friends. So the purpose of this particular video is to look at some commodities. So it's been questionable these days lately whether we're even supposed to be into the uranium trade at this point. And, you know, I think the first thing we have to do is determine whether we should be in the commodities trade. So we're going to look at a couple of charts here. Um, that maybe they can shed some light on whether we're still in the right spot. Am I still in the right spot for commodities? So this first chart here is a monthly chart in log scale of the Thompson Reuters Commodity Core Index. Now, this index, it's a basket of many different commodities, so it's a good representative here. So here we are looking at the monthly chart. Now, you'll notice that I have these blue bars here. If I pull them away, basically what this is a fractal. So, and this is just for visual purposes here, but what prompted me to pull these fractals? Well, I looked at the action since this COVID low here, and this is where we finally regained the 200-day moving average and started to see a V-shaped recovery, similar to this here. Okay, so then I pulled this fractal. As you can see, it's just right there. Now what I can do is I can overlay this fractal over that starting point. Excuse me. So what we start to see here is some similarities. So, is it perfect? No, of course not. Fractals very rarely are, but what are they doing for us? Well, they're giving us a little bit of a roadmap. So even if we zoom this in a little bit, we can start to see, just as it happened here where we lost the 200-day moving average, we're starting to lose the 200-day moving average. It's acting as resistance now. Right here is the same deal where this consolidation occurred. So, if I want to say, hey, am I still supposed to be in commodities? Should I be all cash? Should I be in treasury bills? Whatever. So this is one of these spots. So, inflationary times, commodities tend to outperform. There is also the theory on the 10-year cycle. When you start to look at these cycles, you say, okay, well, 2000 to 2008. Okay, was it a 10-year cycle? No, but it's close, right? Then you have your financial crisis dump here. Then you have another 2008 until 2020. So it's about 12 years. So, we're kind of in the ballpark of the 10-year cycle, the 10-year up cycle, the 10-year down cycle. So now we're back. So is this the beginnings of the next 10-year up cycle? And if it is this what's going to lead us into 2030? Well, we don't know. We don't know that at all. But what am I trying to achieve with these fractals is basically, all right, give me a roadmap, a slight roadmap, and if it keeps following it, then I know I'm in the right spot and I can plan accordingly. So, we have this run up into this consolidation, much like we had in the early 2000s. This run up into this consolidation, which then created the leg up. So at the moment, am I supposed to still be feeling okay about being in commodities? Yeah, I mean, right now I am. And if it follows this roadmap, then I'm still in a good spot. So let's take it to the next step. So here we have commodities against SPY. And again, it's against the SPX. So again, it's another fractal pull. Let me see, we got it. Okay, so here's your fractal pull. And again, what's my determination for this pull? Well, it's regaining this 200-day moving average, which is the white line. So that's kind of what I'm basing this off of. So if we get back over here, we've been riding this 200-day moving average down, basically 10, 12 years. So now we've started to recover. So maybe this is again the new 10-year cycle on the commodities. Okay, so this is commodities against SPY. Now, if you look at this fractal, the roadmap is pretty clear and it's following it to a T. So, this first consolidation period, we can look back and we can see once again we've lost the 200-day moving average and we regained it here. So, in order to say, okay, this fractal is still valid, this roadmap still may be valid, well, now we're going to be looking for this 200-day moving average to get regained, just to say, hey, it's still following this particular fractal of this 10-year cycle. coming off of this 10-year bear cycle. So are we in the beginning of a new 10-year bull cycle for the commodities? Remains to be seen. Is the fractal telling us something? Well, right now it's telling us that um, very similar to this area here in the early 2000s, it's following that roadmap. When does it break? When do we say that this is invalidated? Well, if it just keeps going down and doesn't, regain its 200-day moving average in fairly short order, well, we can say maybe this fractal is no good. But if it still continues to follow this roadmap, I'm still there. And this is some pretty healthy consolidation here that occurs. You're looking at a good, possibility of a 35 to 40% drawdown if this fractal, you know, do these fractals follow each other to a T? No, of course not. We saw that with the original uh, commodity index, right? So, this is a much stronger V-shaped recovery leading into consolidation. So you have a couple of things that are still working in the favor of saying that this is just a healthy consolidation. We'll see where it goes, but as far as these fractals are concerned, that's kind of what I'm looking at. And remember, this is a ratio chart, so all this is doing is that who is stronger at the moment? Well, since uh, early 2020, commodities have been stronger than the SPX index. And that's basically all that this is saying. And this fractal is saying it may potentially remain that way. That remains to be seen. But, I've got a pretty solid roadmap here on that. And if it follows this, then we're still going to be in good shape. Okay, so we looked at these commodity indexes and we pulled these fractals. And at the moment, it's saying, yeah, it's still good, okay to be in commodities because, they're showing the strength. They're showing the strength against the broad market index. Okay, so, all right, well, I'm a uranium guy. So, what does URA look like against the core commodity index? Now, this is a tough one. You can't really pull any fractals here. But if we go and we still go with the philosophy of the 10-year cycle, well, here's your 10-year bear cycle. It's obviously moving out of that. Now, is this a big give back? Yeah, it sure is. Is this a red flag? It absolutely is because, if we take a fib on here off of this low and run it up to this high that it's been 1336. Okay, close enough. We've the retracement size is extremely large, and it to me it becomes very red flaggy, right? So really ideally with a Fibonacci retracement of these like this, if you want to still see that it's still healthy, you really don't want to get past the essentially the golden pocket, which is a 62% retracement. You certainly start to get a little worried when you get past the 38, and the red flag comes out when you get past this 50% retracement. Well, guess what? We've gotten all the way down to the 78% retracement. So, there's a lot of work to do. There's a lot of wood to chop. The 200-day moving average, we got over it, and again, it closed down below it again. So, there's work to do here. All this is saying is that the general commodity complex has been stronger um, than the uranium complex since, well, guess what? The November 2021 highs in uranium. So since then, it's just been, you know, relatively weak compared to the rest of the commodities complex. And if you look around the commodities complex space, within that time, we've seen a lot of rotation into different commodities, wheat and corn, and precious metals are now moving. We've had oil. We've had many. There's again this particular index tracks a whole basket of commodities. So what are we doing? We have one commodity that we're fighting against the rest of the commodities complex. So yeah, uranium has obviously shown that it's been weaker since the November 2021 highs. It's just plainly that simple. What's positive about this ratio at the moment? Can we glean anything from it? Well, if we get to our extreme low, there's your high, here's your higher low, and it's a slight breach of the recent high. So technically what this did here is confirm a monthly trend change back to the URA bulls. Now, we are in a precarious position once again already. So, this level here is the make or break. So if this needs to form a higher low against this low, and it needs to move up. So not out of the woods yet by any means as far as this ratio chart is concerned, as far as URA against the entire commodities complex. But, we watch it. URA versus SPY. So we have a fairly decent symmetrical triangle that, it's been breached. So, what makes this a good support line? Well, any of your trend lines, you really would like to get at least 3 touches on a solid candle. 1, 2, 3. So you've got that. It's pretty good. Up here, 1, 2, 3. Can we adjust this a little bit more? Yeah. Does it matter that much at the moment? Not really, because it's been a pretty strong breach. Remember, we're still on this monthly chart. It's been a pretty strong breach. We've lost the 200-day moving average, and we're coming in testing the bottom of this horizontal range. So not much good to say about that. It's basically in an equilibrium at this point. It's coming off of this monthly uptrend here, which has been lost when you did not make a higher high here, and now it's just in a equilibrium. And one could say, because let me just look at these lows here. Yeah, this low has been breached. So not only have we lost the uptrend, and we are in an equilibrium, but there are real technical traders who would say, yeah, it's now in a downtrend because it was a lower high and now a lower low. So, I'm viewing this as an EQ against SPY. So this doesn't mean that URA just goes ripping and SPY doesn't. URA could draw down less than SPY does here, and that would still affect this ratio chart in that way, making URA look stronger, okay? So nothing great to report here. Big breach here on this triangle, support line, trend line, however you want to look at it, and we are testing the horizontal supports to truly confirm a monthly downtrend, which would indicate that URA is going to continue some weakness against SPY. URNM SPY. Yeah, same type of deal, right? So, I've got this value area box here that's kind of defining this range, and we're testing the bottom of it. There's just no two ways about it. Again, so you've lost your uptrend, and now you're technically, let's see if we got this low. Yeah, so we've technically breached this higher low here. So that's in the slightest extent, it's confirming the monthly downtrend. So the last one we want to look at, because this is the strongest name in the space. So this is CCJ against the index. So again, another fractal pull here with this V-shaped recovery off this 2-month this 200-day moving average. So if you pull this fractal and you start to overlay it where we've regained the 200-day moving average, well, this is what we come up with. Now, does it mean necessarily it's going to follow this path? No, of course not, but it's a little bit of a roadmap, and it's kind of been following it. So, anyone who's paying attention knows that CCJ is without a doubt the strongest name in the uranium space. One could contend that Kazatomprom maybe. I haven't really looked there. I will in the next video. Following this one, we're going to look at specific uranium names, but we have a fractal here, and it is following that roadmap. So pull this away, and what do we have? We also have CCJ is in a bit of an upward channel against this commodity complex, and it's in a monthly EQ. It's just that simple. I mean, literally, is probably you could say that it has again lost this uptrend against the commodity complex. But we're getting like breaches on both sides of this with no follow through. So to me, it's just an EQ. the good news, right? So we are above the 200-day, and we've been closing above the 200-day moving average. We are regaining this whole moving average stack. Zoom in for you. So it's kind of been used as support. So, anyone who truly follows anything, my technical stuff, I like when I start to see these EMAs, these moving averages stack up, and it's a good indicator for me as to whether they're going to be used as support or resistance. So you can see they stack up here, they're used as support for a while. They start to spread, they get the stack, they're used as resistance again, and they're moving up, and now they're stacking again here, and they're kind of being used as support. So as far as that's concerned, decent news. So again, the purpose of the video is, are we in commodities? Is that the right spot? And if that is the right spot, is uranium the spot to be in the commodity complex? And there are things that are saying yes, there are things that are saying no. If you look at this URA against, it's saying no. It's saying no. It's still weak. There's continued weakness since November 2021. There's been a full breach of these fibs. Um, and that's that. So, it may be that we have to see how it reacts down here against this monthly low here. But, these breaks with no follow through, they're difficult to deal with. As far as saying positively that you're supposed to be in uranium at the moment. So that's the deal with these ratios and these fractals. Do with it what you think. I'm of the opinion that in me personally, I'm just in a holding pattern, and I'm waiting for the trends to change in my favor, at least in the bullish favor for me. And it's going to stay that way until something else changes. So if we look at we want to pull up the daily, it's a clear downtrend, right? And there's just nothing that says that, it's not giving us any indication that it's going to change on the weekly. I mean, rejections here, a little slight bull break, no follow through into a hard rejection. Those are red flags, right? So, but our range is tightening up here. So we need to see how things shake out after that. Okay, so following videos are going to be uranium name specific, and we'll see what we see there. Over and out.